Good afternoon, everybody. It is December 22nd, 3 days before Christmas and 1 day before the Arctic blast, I guess, depending on where you are. I see that some of you, according to your chat posts, are already getting the Arctic blast today. I am looking forward to it overnight. Woohoo! 0 degrees and 10 inches of snow. Can't be more Christmassy than that. So yesterday, I did an interview with Forex Analytics that I've posted in the chat rooms, and I talked about briefly what I thought was going to happen last year and what I think is going to happen next year. So why don't we get into this expanded review that I added on to overnight, and is the precursor to, I don't know how long it's going to be, 40, 50 page report for the new year, covering a lot of different topics, some of my top picks, and why I think defense is the name of the game in the first half of the year and maybe all the way to the third quarter. But then we are going to see a massive, really big presidential cycle rally as the dollar starts to come off, as the energy equation starts to even out, and we see that various supply and demand imbalances start to go away. All these things take time. That's why it didn't happen overnight in 2022. And we are finally going to see the prolonged economic expansion and bull market that I've been talking about for several months now, beginning after this bear market is over. So really what this bear market is all about is getting things back to equilibrium, some historical norms, and letting the pressures that built up from COVID and the malactions, or at least actions that may have been wrong by several major international actors, dissipate. Because I will say this once again, it is futile, not just the forecast, it is futile to compete against the United States. Our economy is so strong, so diverse. Our country is so protected and has such a good system that all these ideas about the collapse of the United States are just completely out of line. People try to look backwards and say, oh, it happened to the Romans. Well, the Romans didn't have tanks and a global financial network and diplomacy around the globe and resources and technology and all the things that we have. The Ottomans, the Greeks, whoever you want to compare us to. There's only one thing that I think has changed, and that is we are living in a technological age where virtually every problem is solvable, and that's a big deal. The whole this time it's different thing matters. We're not talking about inventing the wheel, right? When they invented the wheel, it increased food production and transportation manyfold over. Harnessing the power of fire and the wheel allowed humanity to expand into hundreds of millions of people around the globe over a course of centuries and centuries. And then we improved upon architecture and engineering and agriculture. Standard of living went up again. Had the dark ages, mainly because of disease and stupidity and anger and violence. And since then, now for hundreds and hundreds of years, every measurable statistic of standard of living has improved, generation over generation. Every single generation for hundreds of years has lived better than the last generation. And through it all, there's been doom and gloom. Oh, the world is ending. Our government sucks. Their government sucks. Those people suck. And it's just never really been true. The reality is fewer people are starving today than ever before. We have some work to make sure that continues. More people are educated. Fewer people are oppressed. There are fewer soldiers at war right now than ever before. And that's even with the Ukraine. I've put out those lists before. Standard of living just keeps getting better. Now, I made an argument way back in college that would continue. And it has for 30 years since I wrote that paper that I was given a C on. I've had a lot of professors give me C's because it didn't fit in with what they believed. And it turns out that the English teachers who said I wasn't a writer were wrong, that the economics professors who said that my theories about macroeconomics were wrong, turns out I've been right over and over and over again, mainly because I've just followed the right people. I've done my best not to stand on the shoulders of giants, but, at least sit there a little bit or, jump on their back and hang on for dear life. So what I'm going to talk about today are the things that I talked about last year, the things that I'm going to say about next year, and then for the foreseeable future after that. Because if you understand the big picture, it makes forecasting the shorter term a little bit easier, not much. But what it really helps you do is prepare for those important investment events in your life that can be life-changing for you, or can help you put together so much money that you don't have to worry about things ever again, but also that you can do some really neat things with that money, like send a couple bucks to some sort of Ukraine relief fund, which I did yesterday. It was a rather big check. I had to cover up for it, though. When I went out to pick up a pizza last night and pick up some Christmas cards, I ended up buying the entire staff at a Walgreens dinner. Made some big tips to our local Italian restaurant. Merry Christmas. Haven't told Jolene that I wrote a rather large check to Ukraine relief. So I'm throwing that in there because I want you to go and watch that Zelensky speech to Congress if you haven't. If you've ever read about World War II and Churchill or FDR or Eisenhower, the speech yesterday by Zelensky matched anything that I've ever seen before or read about before. He's an important figure in history. I think history is going to reflect very well on him. I think he is going to win in the Ukraine. I think Russia is going to get pushed out. I think Putin's going to be disposed of, but they need our help. So I'm doing what I can. I'm sending money. As an investor, hopefully you get to a point where you can do that. You can do those things because it's important that you do. The capitalist system is not perfect. It's just better than everything else. It needs regulation and it needs altruism. The winners can't be like a dragon guarding their gold. We have to use that gold for good things. All right, why don't we get started? Let's start with disclaimers. All right, enough of that. Everything I talk about today will be in the investment letters, and I will have an expanded series of articles on Seeking Alpha going forward. I'll probably be writing 2 or 3 articles a week on Seeking Alpha, at least through early June. Then we have World Series of Poker, obviously, for me, and then summertime travel and goofing off. So middle of June to Labor Day weekend, I'll be pretty scarce as usual, once or twice a week showing my keyboard. But between now and then, we're going Hamilton, full Hamilton on you. Gonna write like I'm running out of time because there's a lot of important things to say and get accomplished before this new generational bull market and economic expansion starts, I think, late in 2023. So we've talked about what the real purpose of the Federal Reserve is. It's what? To protect the dollar. It's not to control inflation. It's not to stimulate employment. Everything derives from the dollar, which derives largely from the bond market. So we've been following TLT, the 20-year long bond, which has really crashed in the last year as interest rates went up. And there's an idea that the long end of the curve has to come down a lot. That's based on that we're not going to see a lot of growth in the next 10 or 15 or 20 years. On aggregate, that might be true, on aggregate. But the parts of the economy that grow are going to grow a lot. Fourth Industrial Revolution technology is moving at breakneck speeds as it impacts everything, manufacturing in particular, but the technology that we're using to solve a lot of problems in agriculture, in industry, in business and healthcare, those subscription revenues are just going to keep stacking up on top of each other for a very long time. And we are in the infantile stages of a revolution in space that's going to usher in an era, maybe not in my lifetime, but this century probably, of space exploration and colonization that we've just imagined so far in Star Trek, Star Wars, and things like that. More Star Trek. So if growth is going to be bifurcated, if the great divergence that I've been talking about occurs, where the old man stocks and the old economy stocks gradually fade away, and the new economy stocks reemerge, and they're getting crushed right now, but reemerge to be the leaders, then what you're going to see is 4, 5, 6% growth in the growthy areas, but negative numbers in the non-growthy areas. And it'll come out to be 2 or 3%, maybe 4% on GDP. What does that mean for the long bond? It means that it should be normal-ish. Way ahead of schedule, it looks like we have entered a new new normal, something that Ben Bernanke said he didn't expect in his lifetime. Well, like most Fed chairmen, he's wrong about 49% of the time, unless you're Alan Greenspan and you're wrong about 89% of the time. The reality is that COVID shocked the system to a point where we ended up bailing out probably double what we needed to, maybe triple. Hard to know yet. We'll figure it out over the next 5, 6, 7, 8 years as the last baby boomers get onto Medicare and Social Security. But I believe that we pulled forward a lot of the baby boomer bust bailouts because COVID was the crisis. It was too good to pass up. Never let a good crisis pass you by, right? A lot of sayings about that. Politicians live for it. It's when they have cover to do all the things they'd like to do so they can go back to talking political smack to stay in power and participate in the skim that is being a congressperson. The big skim. That's one of the places where the big skim exists. Big skim exists in the corporate boardrooms. The big skim has been in crypto, clearly. The big skim is Congress people. And I've learned that the big skim at a lower level, right, the 8-figure level, occurs locally. I have discovered it's not just the big thefts that occur from the corporate executives and the Congress people, but also at the local levels among local politicians, all the hooked up people in the local economies. So when we take a look at things, perspective is important. If you're distracted by the "you're a Republican, I hate you," or the "you're a Democrat, I hate you" bullshit, somebody keep track of the quarters I owe for Farmer's Words today. It's Christmas. I don't think I'll owe much. If we don't get distracted, we can win no matter what by investing in the things where the big money is going. Well, the biggest thing out there is the bond market. That's pretty good, right? Pretty good transition there. It's almost like I practiced this once. I never practiced these. I practiced this one. The dollar is going to get stronger one more time, maybe twice this year. Could have a couple more waves up or just a spike. Not really sure. We'll see how it goes. But over the next 6, 7, 8, 9 months, you're going to see the dollar get stronger. And I think really the dollar gets stronger through spring. And that means the interest rates are going to stay high and get a little bit higher. And that TLT is going to get beat up really bad one more time. You can almost start to see it already. That little hook on the right-hand side, right in here, right? So if TLT gets down to the low 80s, that should coincide with the stock markets correcting. So let's talk stock markets. What did I say last year? This is from my forecast, December 30th. The S&P 500 will break 5,000 and 4,000 in 2022, while likely ending near the lows of the year. I clarified even more. I said middle 3,000s will be a low. Now, we came up just short of 5,000, but we've been in the middle 3,000s. That's the existing low, and we'll see where we end up. Today, the stock market's getting beat up. Who knows why? Low volume, traders can do what they want. So what I said about last year exactly came to pass. So when I told you to get the 40, 50, 60% cash in January, those of you who listened and have just slowly trickled in some of that money are doing well. I've got a few subscribers who are constantly asking what to buy. You're missing the point. It's always been about asset allocation. That's why I told you, break up your portfolio into slices. The cash slice, which will normally be low, but from time to time will be high. In the past year, it should have been high. So that as you cherry picked some of the great long-term stories that are out there in teeny tiny bites, you still were relatively defensive, even though we've bought small caps that are down 50, 60, 70% so far. And that was after they were down 50, 60, 70%, such as life. But if you took small enough bites, and you collected some option premium because we sell so many options, you'll do okay. My cost basis on Black Sky and Spire Global are under $2. My cost basis on Planet Labs and Satellogic are both at 5 and 4, 5 and 450, something like that. Even though the stocks are down a lot, the option premium and the fact that we buy our stocks at increments of around 20 or 30% lower, right? There's no point in screwing around buying a stock if it drops 5%. Who cares? It doesn't change your cost basis. But if something you buy that you like for the long term drops 20 or 30% because the market throws everything out in its category, now you can make an impactful cost basis changing transaction by buying more because it went down 20 or 30%. And I need you as an investor using my service to understand that you need to learn how to understand what I'm saying. Asset allocation is most of your decision-making process. Picking out the individual stocks adds super long-term juice to the portfolio. But I have $30,000 and I want to trade it up to $1 million. Good luck, man. You will make the most money doing two things: having a good asset allocation and figuring out a way to exploit the pivots in the market. The last pivot in the market was about a year ago when it started heading down. The next pivot in the market will be second or third quarter of this year, 2023, when it starts to rally again. The $1.7 trillion government bill to fund the government sets up a fiscal cliff in September of next year. I had thought the stock market would be bottoming in May-ish, Memorial Day-ish, but maybe it ends up bottoming next September. Historically, that would be pretty interesting. I'm not very impressed with about 115 Republican House members. You got 115 Republican House members yesterday boycott Zelensky's speech. Historically, do you understand how big of a deal that is? Foreign leaders don't speak in Congress. They don't. It's only happened a few times since World War II. Might even be second time. I know it's not frequent. Because there's some pissing and moaning about a few $1 billion of aid and weaponry to fight Putin, which, my God, if you can't get behind that, what can you get behind? Did we not learn from Hitler? Really, did we not learn from Hitler? That's who Putin is. And here's this guy, a regular dude who becomes president, right? Not a billionaire who bought his way in. A regular guy that the people gave a chance. And he's proving to be one of the greatest leaders in history, I think. He's been on the battlefield. He's kept his people together. He's built support. He's done all the things that a leader is supposed to do. And he's pretty humble about it. Watch his speech if you haven't yet. In any case, my crystal ball ended up being pretty much spot on for 2022 when it comes to the S&P 500. Here's my outlook for next year versus the analyst. This is according to FactSet. Analysts expect revenue growth of 3.3% next year in the S&P 500 and earnings growth of 5.5% versus the average of 8.5% in the past. I think the last 10 years is what that is. I believe that their slightly lowered expectations is just groupthink. I think it is what Buffett has called the institutional imperative, which is to say pretty close to what the other people are saying so that if you're wrong, you don't lose your job. Right? This is all about self-preservation for these analysts. Only about 10 to 20% of the analysts are worth their salt. All the other ones should be replaced by AI as far as I'm concerned. So just like we can play off of traders, we can play off of the analysts because they are notorious followers, not leaders. I was offered a bunch of analyst jobs. I said, well, how am I going to be allowed to do it? Well, we need you to do this, A, B, C, D, check the boxes, blah, blah, blah. I was like, well, what if I have an opinion? Well, just check the boxes. Think, 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 think. I said, no. It's an impressive list of jobs I've turned down. I think I've turned down a lot of six-figure jobs. And it's because in my industry, finance, 4 out of 5 of the products, 4 out of 5 of the opinions, 4 out of 5 of the managers of the brokerages suck. It's a level of bullshit that you probably can't believe. Take whatever industry you're in and multiply the bullshit by double or triple. That's what finance is. Just ask Sam Bankman-Fried. Here's what I think about next year. I think that revenue growth will only be 1 to 2% on the S&P 500 because semiconductors are still in their reset for the next cyclical bull market, which will come as inflation comes down. The semiconductor industry will do very well because they'll make some adjustments. Consumer belt tightening is going to hit in the first half of this year as people become uncertain about their jobs. They really shouldn't be, but we're people, we're emotional, we'll be scared because Chairman Powell wants us to be scared. And I think that earnings are going to fall about 10%, maybe a little less, maybe 7, 8, 9%, but about a 10% drop in earnings due to firm wages, higher interest rates through a cycle, right? It's not just that we got to a certain interest rate, it's that we're going to hold them for a while. Resurgent fuel costs into the middle of the year. We have that big of a shortage of refining, which is why I love that one little California refining company for biofuels. Again, consumer spending subdued in H1 and buybacks continue to slide. Does anybody remember what I said 3-4 years ago? And I've repeated it a couple times. When does the stock market really get beat up? when buybacks fall. So now Congress has put a whopping 1% tax on stock buybacks. And buybacks have already started to fall, except in energy stocks. So the energy stocks that I'm advocating, 2 of them are doing buybacks. And you're probably going to see 1 more of them also do it. And my companies a couple of them are pretty small. So think about what that means for XLE. There's a shortage of refining. Oil supply is peaking. Natural gas is in high demand because of the Russia invasion and war on the Ukraine. You're probably going to see XLE do pretty well. It's going to sink into the perceived recession. And it is going to be a recession. It's just going to be a weird one because unemployment's not going to really ramp up that much. But from wherever the bottom is, and I don't think oil stocks are going to go down as much as everything else. But again, it's tough to buy a lot of cyclicals into a recession. I would be thinking about what's coming as a pretty interesting opportunity to buy select commodity investments. I don't see a super boom coming in commodities like some other people chant, stomp their feet, pound their chest. Whoa, commodity super cycle. There's a few commodities that are going to do very well for a while. Earnings already declined year over year. First time since the Great Recession. Just a little bit, not much, but it's happening. A lot of things are just starting. And people are like, but the stock market's down 18, 19, 20%. Yeah, middle of the game, folks. Middle of the game. See here, already started to turn over a little bit. Stock market jitterbugging down as it realized what was happening to earnings. So what is the earnings reality? Again, analysts see S&P 500 earnings around 230. I think it'll be around 210. I think PE will bottom around 14, which is what it's done quite a few times. Right? This area 14, it's very rare that we get down here. 14-ish is about as low as you'll see PEs go, because now, especially in this era, you have the quantitative buying that takes place, right? The computers just say it's time to buy. So they do. So when this, which has been falling, and what did I talk about all of last year? Valuations, they got to come down. It'll finish off 210 times 14 gives us a S&P 500 around 3,000. That'll be what the bottom looks like unless there's a Fed mistake or some sort of international event. So here's your S&P 500. I think Jay Powell backs off when we get to around 300 on the S&P 500, 3,000 on the S&P 500, 300 on SPY. Could it go down in the 290s, 280s for sure? Would it break through into the Armageddon zombie apocalypse or Jeremy Grantham zone? I doubt it, but the potential is there for it to happen because there is a pattern in place that could manifest. There's another pattern in place that could block it. Got this long-term rising trend, but you have this shorter-term megaphone widening pattern. So to get down in here, we would need either a Fed mistake or something bad on the international side. QQQ is more important. That's where the big leadership is, and that's where most of the money on corporate balance sheets is. Your triumvirate of Microsoft, Amazon, and Google control whatever it is, 70, 80% of the cloud. And the cloud's going to grow and grow and grow. So things attached to the cloud, one way or another, the hardware, the software, the connected IoT, that's where you're going to find your winners. That and other fourth industrial revolution technology that changes manufacturing, transportation, agriculture, logistics, and go right down the list. If machine learning and AI can make something more efficient, it's going to happen. And they're going to get subscription revenue off of that. And they're going to make money. So QQQ is still the place to be as this correction plays out. QQQ has beaten the S&P 500 for every rolling 3-year period since 2003, and that will continue because QQQ was no more overvalued than S&P 500 this time around. Back in 1999, NASDAQ was way overvalued compared to the S&P 500. Now they started at similar overvaluations. So when the correction is over, QQQ will just go back to outperforming because they are better companies. It's really that simple. They don't have the old economy stocks in there that are slowly dying. And remember, they only die slowly until they fall straight down into their grave. At some point, these companies have the equivalent of the last year of life if they are human, right? The slow decline and then the fall off the cliff. Don't flirt with it because you don't know when they fall off a cliff. Big death in finance today. Actually, yesterday, they reported it today. Scott Menard over at Guggenheim died of a heart attack while he was working out, which just goes to prove my theory. Okay, it might be too soon for that joke, but don't work out, right? Any case, that's not true. You should work out. Just don't kill yourself doing it. All right. Are we going to get into Jeremy Grantham zone down here? It's much less likely than it is on the S&P 500. So here are my completely wrong S&P 500 and QQQ 2023 forecasts. Updated this a little bit from Forex Analytics interview. I really put some numbers on a sheet of paper, which looked really funny when it wasn't on a computer screen. But I scratched out some notes. I think the S&P 500 or SPY bottoms in Q2 or Q3. I'm starting to think that it's a double bottom in Q2 and Q3. I think it might be both, around 300, maybe a shade lower. And then a furious rally because of the supercomputers telling everybody to buy to 390 to end the year. Full year result, single-digit percentage gain, probably 3, 4, 5, 6%, right in there. All-time highs in late 2024 or early 2025 would be my guess. Each one 2025. So it'll take some time to get back to 5,000 on SPY. QQQ, same bottom, around 200, maybe a shade higher. This will lead the year-end rally. I think finishing around 270, low double-digit return, 10, 11, 12, 13%, whatever it ends up being. Again, all-time highs, late 2024 or into 2025. So let's have fun with oil. The drop line I used yesterday was things I usually say to my fiance, and that got quite the laugh. I thought that the price range on oil would be 50 to 80. It's higher now because of the Russian invasion of Ukraine. Have we talked about that yet? Right. Send them some money, folks. Looking at 10 to 15% higher range in oil now, maybe for a very long time. It's going to take several years to rectify the situation, and 2026, 2027 pivot to EVs isn't here yet, right? It's still 4 or 5 years away. Occidental, I saw that the Permian Resources puts were about to trigger. I'm not sure if they did. New Fortress Energy, liquefied natural gas at the wellhead in the ocean, right? Unique technology. They're going to make a fortune. Kinder Morgan not only has the leading natural gas pipeline network in America, but they're also number one in carbon capture, which we have seen is a big deal, and backdoor play on hydrogen. And then Ametis, which might end up being the most profitable refinery in America. I think it's almost certain to be, and I think it's by a lot. The numbers just scream out that Ametis, starting from zero, is going to prove the law of small numbers. And I think now that I've started to talk to traders about a short squeeze on this one, it'll happen. And it'll happen because it'll be triggered by another big institutional buyer like GMO or BlackRock or somebody. Again, the dollar is going to trade in a higher range for a very long time. It's not going to be up at 112, 114 like it got to very often, but it'll have those spikes. And the baseline is probably significantly higher than it's been. And it will stay there at least until the millennials start to retire. And by then, India might be a bigger deal. We'll see. That's 20 years off. Euro is never going to have a big advantage on the dollar ever again. In fact, it should be lower than the dollar, and it will be as they burn through some of their accumulated wealth to support their standard of living and transition to an era where they're more sustainable, more renewable. And frankly, at some point, they have to, like the rest of the world, start growing more, not all, but more of their food indoors. Demographics and robots are destiny. That's good for the United States because we have a better demographic situation than the other major economies, Europe, Japan, or China. Remember what I said about China? How if they created COVID, boy, wasn't it just a perfect disease for them to kill off a lot of their old people? And they haven't let the mRNA shots into China. And now they suddenly open the doors and they have record deaths. They're not reporting the COVID deaths, but we can see the death rate going up dramatically. Pretty easy statistical analysis. Isn't it interesting that a country that wasn't sure what to do about affording its older people suddenly have a disease that kills them? I'm not saying, I'm just saying if there's evil in the world, that might be where you find it. That and that Putin guy. So as the millennials enter their peak earning and inheriting years, this is a big deal. The dollar will firm up, or it's really already firmed. It's just going to stay firm. And that doesn't mean you can't trade the dollar. You can. It'll have its periods where it drops for a year or two, and then it rises, and then it drops and it rises. But it's going to push up against that 100 mark over and over again on DXY. One thing that will keep the dollar from getting too high is partial Bitcoin adoption by our enemies and by emerging markets and by the wealthy who want a way to disappear or trade outside the country. So when I was interviewed by Forex Analytics at the end of August, like right here, I said the dollar was peaking. It was at 112 and change. It got to 114. I said it would head back to the yellow line, which is exactly where it is right now. And it ticked up in the last day. This area down here, I guess we could spike down into it at some point, but you won't see the dollar in this range very often. It'll pretty much universally stay between 90 and 100 now for a very long time. And eventually it might even bump up here. This new range, which actually makes sense economically, could occur. We'll see. One of the things I wrote in an article way back when I was pumping oil stocks on MarketWatch in 2012 and 13, as I said, eventually the dollar will get very strong. And it'll be because we are in a position of strength on everything. We really are. Food, energy, minerals, technology, military strength, finance, everything, healthcare. And if the expensive things in the economy and the necessities are things that we're strong in, why wouldn't we want a higher dollar? You only really need a cheap dollar when you're exporting widgets. So your widget makers, your low-tech stuff, which we've already lost that war on with China, are the only ones that benefit from a weak dollar. Strong dollar is better for your standard of living because you can buy more stuff with it. And if international commerce, what we sell, what we export, can get a higher price because they can't find a substitute, then that's better for the higher dollar too. So we are definitively entering a higher dollar period that probably lasts 15, 20, 30 years. We're already a decade in. I said 2 generations. And then after that, I reserve my right to change my mind after a couple generations. By then I'll be an old man. I'll be angry about something by then, I think. Maybe not. I'm not really an angry guy. I think a lot of the things that would make other people angry make me laugh. But when you hear the chorus line and you see the legs kicking and the feet stomping and the chest getting thumped and the woo, 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 dollar gonna collapse, you should laugh at them. You should, because they've been wrong a really long time. I always forget the guy who's constantly saying the dollar is going to collapse. He writes books. Rickards has been wrong forever. I discovered this guy in here. Rickards, the dollar is going to collapse. Everything's going to hell. Not so much. So the dollar is going to stay up here, and your exporting companies are going to do really well because the exporting companies in America don't really sell widgets. They sell more expensive, higher tech stuff. So let's finish on Bitcoin. Back when I had that conversation with Sean Stein-Smith a year ago, he said it's going to 100. I said, sure. I said, when? He said, this year. I said, now I'll take the over on that. That's exactly what I said. And I said that I think that Bitcoin would get to the 20,000 area because I knew that most crypto was going to go zero and that was going to cause a lot of problems, bigger than I thought, but I knew it would cause a lot of problems. And we'd have a crypto winter. And I buy Bitcoin when I got close to 20,000. Well, it has. It's at 16,000 and change right now. The technical analysts that I trust are saying 12 to 14,000 is probably the bottom. I don't care. Every time it drops 10 or 20%, I buy a little more. I almost own 2 Bitcoin. Almost. Not quite. Ethereum, Chainlink, Ripple are all being adopted by the financial industry. Swift is using Ethereum and Chainlink. Bank of America has a big thing going on with Ripple. And there's all sorts of other financial institutions getting in on the game too. Why? Because you can use it to transact money outside of your own institution. And that's important because within your own institution, you can try to firewall it, which doesn't always work because they still get hacked. But you don't really need blockchain. And you don't really need these digital contracts within your own organization. But once you do business outside, which is most business, you need something else. And these digital ledgers, which allow independent verification, and there really isn't any way to hack it because it's a digital ledger that requires multiple verifications, allows you to have digital contracting, monitoring of logistics, monitoring of oil wells, monitoring of energy systems, monitoring of healthcare, everything. It's already going on. I'm not saying it's coming. I'm not saying this stuff is coming. This already exists, and they're improving it and expanding it. So I'm not a Bitcoin gotta have it guy. Consider myself a mediumist. But Bitcoin is going to be a big deal because other countries are going to use it as a hedge against a strong dollar, which are all starting to realize is happening and is going to keep happening. And they need something that protects them from a dollar during those times when it gets too strong, because that's more likely than a collapse. And the super wealthy see Bitcoin as a way, if they can get themselves to a non-extradition jurisdiction, if they need it, they can use Bitcoin to move their money around in certain places. And it allows them to take part. And I'm not talking about people with $100,000 of Bitcoin. I'm talking about people with millions in Bitcoin. It allows them to set up shop quietly and under the radar in places where the US government and Western governments can't touch them. I'm not saying that's good, but it happens anyway. And Bitcoin's just a tool for that. Replaces other older tools. But if emerging markets put just a couple percent of their reserves into Bitcoin, Bitcoin goes to six figures. Easy. I keep coming up with 300 to 500,000 in the next 5 to 10 years. We'll see if I'm right. All right, I'm going to take a look on here. In the future, I want you to submit your questions to my email. I've sent that out one time already. Not really going to take questions during the webinars anymore. I'll make a little exception today. Somebody asked which commodities. Well, I think copper is one of the obvious ones. Somebody asked about gold stocks. I'll say it again. Gold sucks. Gold stocks suck worse. Gold stocks are super high capex because it's getting hard to find gold. And eventually, Elon Musk or somebody else is going to go get a bunch of gold off an asteroid. So gold stocks are junk. They've always been junk. They're just pretty junk. Then every now and then rallies. I said a couple of years ago when I said there'd be a gold stock rally, which was hot for a while. At some point, gold becomes a better holding than gold stocks because gold is scarce and digging for it is expensive. You can trade GLD, right? You can trade it. You pretty much need to trade it with options. No point in just owning it. But the best thing you can do if you want some gold is go out and buy some of the gold mini bars. When you go rummage shopping, see if you can find any gold heirloom jewelry. Doesn't need a diamond. Any stone will do. But gold heirloom jewelry and old gold coins. That's it. That's where your gold investments should be, unless you want to trade options on gold ETFs. I mean, I took the gold stocks off of our list a while ago. Oh, somebody asked a good question. On the international front, what happens if Ukraine resolves? Well, it's going to resolve. I thought it was going to be the end of this year before winter. Clearly, it's not going to happen this year. So I'll say next year. I think sometime next year, probably late in the year, as they go into winter, get ready to go into winter again. I think that you see the end game for Putin really start to play out. Maybe he's more resilient than I think. But I think between his health and the fact that he's losing in Ukraine and the fact that we just authorized more money and weapons, and you had multiple people, Zelensky included, talk about how Iran is perpetuating that war with their drones, I think that it's only a matter of time before Netanyahu gets back in power or one of his allies, and Iran has significant external pressure put on it. And that is the nicest way I can say that. For Iran to be sending drones to Russia to be used in Ukraine, to me, is an Axis-like sin, and they both need to be punished. And right now, the economy of Russia is being punished, just like Iran's is. And eventually, you see the type of uprising in Russia, which you've seen the roots of, similar to Iran. And eventually, revolutionaries just become the people. And they throw out the people who have been oppressing them and leading them in very wrong ways. The Russian people have been very apathetic. That will change eventually. It does every so often, every few generations. And Iran is ahead of them on that. And eventually, I don't think it's unlikely that you see the United States go back into the Middle East and Afghanistan to save the women. And say, enough of this shit. Another dollar. Enough of this shit with oppressing the women. We're going to go wipe out their oppressors. And I think that comes sooner than later. I think it's this decade, because eventually their weapons get too good. there's a line like North Korea is flirting with where it becomes very difficult to attack them because of their retaliatory power. And it doesn't mean that they can win a war. It just means that they can make everybody lose. And we're going to have to confront those things. So while I'm a very liberal guy, I really am, I do believe some things economically that don't jive with AOC or Elizabeth Warren. And I also believe some things that don't jive with the let's just all love each other crowd. You need to kill bad guys. Merry Christmas. So play defense in your portfolios. If we get another rally, if we get a January effect, I hope that you've been managing your asset allocation with the cash allocations that I've talked to you about. And I think you're going to get an opportunity to buy some of the big juggernauts in QQQ to finish off your asset allocation for the next big bull cycle, which I think starts by the end of 2023. All right. Have a great rest of the year. Don't freeze. Don't get buried under a mound of snow, and try to do something nice for somebody. Overtip, buy somebody some food, send some money to Ukraine. And I will have a lot coming out for you over the next 7 or 8 or 9, 10 days. I will have these reports ready on Monday. I'm not going to work much between now and then. I have a couple of articles that I have to get into Seeking Alpha because they're part of contests, which will be my top dividend and my top growth stock for next year. You'll get it first, and then it'll get published on Seeking Alpha, but you should already own them. They're right off of our plug and play list. And what else? The forecast article will be submitted tomorrow to Seeking Alpha, which means it'll be up for you tomorrow as well. All right. Have a great rest of the year. We will be back next Thursday. No webinar on Monday. Take care.